we do expect that in this year, the Chinese policymaker has a lot of room to further support the economy. We have already seen that the very supportive measures in the property markets, in the real estate markets, and also we've seen that there's deregulation signals in the tech platform companies, plus the continuous supportive or accommodative monetary and fiscal policies. This means that working all these together, that China has a good chance to stand out as a fast-growing economy this year amid a global slowing down economy.
Yeah, and do you think it's going to be enough from the domestic side in terms of consumption? Is there going to have to be, because they've obviously buttressed the property sector, of course, and it's so important for the wealth effect. But just in terms of consumer confidence as a whole, they've gone through so much over the course of the last few years, and they don't have the safety net. So do you think that they're going to be more tentative, more cautious once this initial wave goes big?
Sure, that's possible. But first of all, I think there's still a lot of the buffers. I think over the last 2 years, there are excessive savings rate building up in the China household balance sheet. Though this is going to change because in the past, it's just because of lacking of the consumer avenue and consumption scenarios. And this is obviously changing very fast. And beyond that, I think that basically the mass consumption side, it still has a very long runway to go because of the economy gradually rebalances itself and the mass population has better confidence about their future income growth and better safety net, etc. So yes, so after the initial round, there are some kind of the revenge consumption you mentioned in certain areas like travel and lodgings and movie box office, etc. But after that, the mass consumption will kick in going forward.
Min, I'm taking a look at your conviction calls here, and you say that you like selected SOEs, and I'm curious which state-owned enterprises do you like, given the fact that while SOEs make up the majority of the market cap in China, a number of them have been dogged by controversies, right? Ranging from inefficiencies to delistings from the United States, such as, a couple of state airlines recently, even depending on which companies you're talking about, allegations of ties to the Russian war effort. So which ones do you see are investable?
Sure. I think first of all, they're investing in the SOEs. There has some advantages. First of all, they have generally better alignment with the regulation intentions. Second of all, there is some competitive advantage, for instance, in the financing costs side, which gives them a lot of advantage in the current market. And also, what we are liking is that some of the SOEs actually participated in market-based competition already, and they're actually not in adverse positions. For instance, in the property sectors, and we see the leading state-owned enterprises keep continuing to getting market share in that sense. So what we are looking for is those kind of SOEs have that market competitiveness, and also in general, it's improving their efficiencies, and some of them are undergoing the reforms and better alignment with the minority shareholders. Those are the types of SOEs that we're looking for.